One scoop
yeah.
bubble gum. It's a unique combination.
Gross.
Please try it. Thank you, Allie Wagner. All eyes are on the Middle East as the United States and United Kingdom decide how to respond to Iran's latest tanker heist. Washington and Tehran continue to circle one another, each leery of throwing the first big punch. President Trump has sent a small contingent of troops to Riyadh, where Iranians responded by seizing that UK-flagged tanker on Friday. How will these heightened tensions affect the markets? That's just one of the topics we have for Brent Wilsey of Wilsey Asset Management. Brent, thank you very much.
Good to be here.
Is it fair to say a lot of suits on Wall Street are looking closely at what's going on in the Middle East?
Yeah, there was concerns on that, especially since the Iranians put their flag on it, took off the UK flag, which I thought was surprising. But that has moved the oil markets up a little bit, but not as much as it used to, because we're now, the United States is now like a swing state for oil. We can turn on more oil to replace what may be missing there. So it's not having this big effect. I think oil's up like 1 or 2% this morning. So not a big deal, but we are watching it very closely.
Some people say, and you can speak to this, is China more interested in what's going on because more of the oil that flows out of the Strait of Hormuz is actually headed for China?
Hey, you know, it's funny that you bring that up, because actually there's been talk about why isn't China buying our oil? Because we talked about them buying our soybeans and so forth. Well, they need oil. Maybe they can buy some of our oil to help us out as well. So a lot of negotiations. Again, right now the trade talks are not going as well as we'd like them to. We may see more tariffs coming out as a talk right now on Wall Street.
All right, so let's talk about some of the earning reports that are due to come out this week.
Sure.
Some big companies. How will they move the needle?
Well, be watching that very closely, because normally we've been watching what the Fed's going to do with interest rates. Well, now we're going to change focus to look at what's going on in businesses. How are they doing? What are they saying about the future? And we have tomorrow we have Visa reporting. Very important, because it's a consumer company. Well, they're looking for earnings to jump about $1.32 over last year's $1.20. So that's a positive. Coca-Cola will be reporting a good consumer staple, going from 61 cents last year to 62 cents, so that's positive. Also tomorrow we have existing home sales for June coming out. Very important in the real estate market. Now they're looking for estimates of 5,330,000 homes. These are annualized numbers. Now that is up from last period, or I'm sorry, down from last period of 5,340,000. So the housing market is looking pretty stable, which is a positive, I think, as long as interest rates stay low.
So can we kiss the interest cut goodbye? I mean, is that plan now on hold, do you think?
No, I've been talking about this. It's not on hold. I think we could see a quarter-point cut when they come up later in the month here, but it's not the big thing now. Now we're going to be watching this week. What are businesses talking about? What are they doing?
All right. I want you to react to this Market Watch headline I stumbled across on the weekend. The headline reads, "The biggest bull market ever, and yet disaster looms for millions of retirees." One of the poll quotes is, "A tsunami of poverty headed our way for certain retirees who, according to this article, 55% of, or more than 50% of people age 55 or older have no retirement plan, no money saved." What are the implications of such a statistic? First of all, do you agree with that stat? And
unfortunately, I do. And the problem is that people don't realize how fast we're going to get to age 65. The other thing, too, is that they're so afraid of investing in equities, which is one of the best things they can do long term. When you're 25 or 30, 35, you should start investing in equities. You'll do very well in the next 10, 20, 30 years. So they invest improperly because of emotion and fear. Then what happens is they don't realize how fast they're going to get to age 65. Like, oh my gosh, I'm 50, 55 already. How did this happen? We know how fast time goes, and they're not prepared. So they need to be prepared more and talk to more financial advisors about planning for their retirement.
That same article says that 84% of the holdings on Wall Street are held by the 10% wealthiest households in the United States. Is that statistic accurate? And if it is that how we get the difference in how some people perceive this to be an economy that's really doing well and other people are saying, hey, well, what about me?
I don't know about the statistics, so it could be correct, but what I do believe is that people need to follow, like, why does the wealthy have so much money? Well, because, again, they're investing their money. People need to realize that, and again, we talk about younger, when you're 30, 35, if you just put away $300 a month in your 401k, hopefully they have one, or an IRA, you're going to do okay. So follow what the wealthy does. They're wealthy for a reason, because they invest their money. And just because you don't have a lot of money there, maybe you cut out that Starbucks, maybe you cut out, you know, something that is not essential, because you've got a plan for retirement. Social Security will be there, but it's not going to be enough to retire off of.
My old man said, pay yourself first. When the paycheck comes, that's paying yourself by putting something in the bank. Save
Great advice. Yes.
All right. Hey, thank you for stopping
All right,
by so
Paul.
early. We
All
appreciate it. We're going to have more Good Morning San Diego when we come back right after these short but important words.